Your roadmap to the latest in auto. Welcome to Highway Herald, where we track the engines driving global trade. Since early August 2025, coffee has turned into a geopolitical chess piece. A 50% U.S. tariff on Brazilian imports sent shockwaves through supply chains, forcing roasters to reblend overnight. Brazil, coffee's global powerhouse, rerouted exports to Europe and Asia, while Canada reignited talks with Mercosur to stabilize its trade playbook. Consumers everywhere felt the sting: higher prices, empty shelves, and uncertain markets. Here's how a tariff on beans brewed a global chain reaction. Tariffs and the bitter brew. On August 1st, 2025, Washington imposed a 50% tariff on Brazilian goods, including coffee, sending shockwaves through global trade. Within weeks, Brazil's coffee exports to the U.S. plunged 46% year-on-year, followed by another 20% drop by mid-September, according to Secafé. Industry leaders warn that if tariffs persist, U.S. roasters will re-engineer their blends and risk pushing Brazil out of the market entirely, permanently reshaping America's coffee flavor profile. For consumers, that means pricier lattes and grocery store beans as higher import costs ripple through supply chains. Analysts estimate the tariff could raise Starbucks costs by roughly half a point, denting earnings and prompting more menu increases. Brazil's importance is unmatched. Its Arabica and Robusta beans set the global benchmark for quality, volume, and pricing. Substituting other origins introduces higher risk, variable flavor, slower shipments, and unstable prices. Though policymakers are discussing exemptions, proposals remain speculative. Until legislation is signed, buyers and roasters are bracing for tariffs to stay, and for the world's coffee market to keep grinding under pressure. But Brazil wasn't about to sit still. Its next move was a masterclass in strategic redirection. Brazil's countersteer, diversify and defend. Brazil's reaction to U.S. coffee tariffs was swift and calculated. Rather than panic, exporters chose to diversify markets and stabilize prices, holding stockpiles in hopes of a rebound. Shipments were rerouted to Italy, the UK, and even Colombia, an unusual twist given it's a major competitor, while U.S. demand collapsed. Secafé's Marcio Ferreira admitted the American market is irreplaceable, but said short-term redirection is viable if prices hold. The risk is long-term. Once American roasters and consumers adjust to new blends, regaining shelf space could be tough. Brazil's specialty segment tells a split story. Premium microlots suffered from widened price gaps, while ultra-luxury beans like Jacu Bird coffee continued selling well to Japan and Europe, proof that high-end niches can absorb tariff shocks. Ultimately, Brazil followed the classic exporter playbook: broaden the buyer base. Like its beef and soybean sectors, coffee exports are tilting toward China and the EU. Re-exporting through third countries isn't an option. The US can trace it easily. For now, Brazil's strategy remains clear: reroute, not retreat. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our drive to deliver deeper insights into how global trade and industry trends shape the vehicles and the world you depend on. Now, while Brazil was busy recharting its roots, another North American player saw an opening. Canada's play, from backup to bridge. As the U.S. tightened trade screws, Canada quietly accelerated. In late August, Ottawa and Brasilia revived long-stalled Canada-Mercosur talks, aiming to open new lanes, expand partners, and reduce North America's supply choke points. For Brazil, this isn't just about sales. It's a credibility boost, offering access to a G7 market with stable terms. Formal negotiations could resume by October, and unlike other trade hurdles, this one has a smooth track ahead. But don't expect cheaper coffee in Canada. Global supply remains tight due to bad weather in Brazil and Vietnam and shrinking inventories. Even Tim Hortons raised prices about 1.5%, citing bean costs. Canada's real edge lies in reliability. Extended port hours, faster ag clearances, and larger storage capacity help keep trade flowing. If paired with financing for sustainable farming, Canada could evolve from backup buyer to bridge builder, linking South American producers to North American consumers. Yet while Canada played the quiet diplomat, U.S. roasters were scrambling under pressure to adapt. Winners, losers, and the roasters' counterplay. Inside the U.S., coffee roasters have shifted into crisis management mode, adopting a three-gear strategy. First gear, hand-to-mouth purchasing, short contracts, and limited volumes until trade policy becomes clearer. Second gear, reformulating blends by substituting lower-grade naturals from Ethiopia or Central America and adding more Robusta to contain costs. Third gear, selective price increases. Premium chains pass them on to loyal customers while private labels quietly downgrade quality to maintain affordability. Some roasters are delaying Brazilian shipments and burning through existing stock as they await Washington's next move. Possible relief lies in an executive order and a bipartisan bill proposing tariff exemptions for goods not grown domestically, but both remain political bargaining chips. Attempts to reroute beans through third countries are risky, U.S. Customs can easily detect them, and roasted or instant coffee exports can't replace bulk green bean volumes. The outcome, a fragmented, high-stress market marked by cash flow strain, futures pressure, and nervous traders waiting for the policy clutch to finally release. But coffee isn't the only sector feeling the strain. Other industries, including autos, are reading the same warning signs. The bigger signal for supply chains, and why gearheads should care. For the automotive world, the coffee crisis feels familiar, just like the semiconductor shortage or steel tariffs that once paralyzed assembly lines. The same mechanics apply. One policy shift disrupts the supply chain, forcing buyers to diversify, reroute logistics, and pass costs to consumers in the name of resilience. Retailers are now retooling procurement playbooks, crafting multi-origin contracts, evaluating suppliers by political risk, and preparing alternative blends to avoid taste shock. Logistics hubs that keep goods moving amid politicized ports become the hidden winners. For brands, transparency is the new horsepower, explaining recipe tweaks and reassuring customers about stability. For policymakers, the warning light is clear. Tariffs push trading partners to build alternatives. Canada's renewed Mercosur deal proves it. The same logic now drives automakers to secure multiple sources for battery minerals and components. Whether in beans or batteries, resilience is the new KPI. If tariffs persist, expect a lasting reshuffle of origins, just as EV supply chains permanently changed after 2023, which brings us to the final question. What does this mean for global trade's next big shift? Verdict: the final pour, tariffs, taste, and the new supply chain map. Here's the takeaway. The 50% US tariff on Brazilian coffee didn't just make cappuccinos costlier, it rewired global routes, emboldened Canada to reopen Mercosur channels, and forced US roasters to master blend diversification overnight. Exemptions and trade bills may come, but until real signatures hit the page, uncertainty rules the roast. And for us automotive fans, this is a live demonstration of how a single political jolt ripples through the entire production ecosystem, from raw inputs to showroom floors. If coffee can shake the world this fast, imagine the tremor when the commodity is lithium, nickel, or semiconductors. So before you take your next sip, think about this. Do you believe tariffs should ever target essentials like coffee? Or is it a policy misfire waiting to happen? Could Canada's reliable supply approach become a model for other industries, including autos? And if global trade keeps fragmenting, how should countries balance resilience with affordability? Please share your thoughts below. If you enjoyed this breakdown, subscribe to Highway Herald to stay updated on the latest vehicle stories, industry insights, and the trade shifts shaping tomorrow's drives. Thanks for watching and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.